Hello, trading is closed on February 24th, 2020. Let's go over our calls. I thought Friday's pattern was pretty positive. I looked for a gap up in higher prices, and I said the only thing that would kill it would be if we gapped under these lows. I wasn't expecting that because I hadn't seen the gap, the straight line drop, occur this late, but now I have. In any event, whether I say it or not, gapping sharply kills the call before the open. So, no call. We had an old target that finally printed. Ultimately, these ultimate targets will print. I get on average about one failure every 2 years out of 150 ultimate targets per year, but ultimate means that ultimately it prints. You don't always get it as soon as you want it. We have a new target. Favor to print tomorrow, unless we gap up smartly. That's my call. Look for the pattern with the early low. This is it. Tomorrow's pattern has the early high. In spite of this lower target, it's somewhat positive. We gapped down, hit lower lows, closed over the midday lows. Should lead to higher prices if we don't gap and take out this low quickly, even if that price prints. Early on, MEJT said ultimately lower prices would print, which they did. Here it said ultimately higher prices, which they did. It looks impressive, but again, it just means there is a target at a certain price. Nothing in this system requires the moves to be of this magnitude. Tom DeMark's stuff hasn't been very good, but one thing which has been good is his TDST line, which is here. And there typically is support at one bar under the line. So this bar isn't completely under it. You could have one more, or it could stop here. This is just a DeMark support level, and here we have the lower Bollinger band. So support doesn't always hold, but at least you're at a support level. And people who sell now at least have a possibility. Now there's a certainty that you're selling into the hole. Although I don't think this drops over, doesn't mean we go lower tomorrow. Well, this is an important line here, and DeMark said we're supposed to trade over it by the same distance we traded under it, and we didn't. So that fails. It's too bad, but that's the way it goes. We pointed this out last week. Here's the Gann fan line. Here's a parallel. You see how nicely that defines today's high. This is a retest of the prior low. Breadth is much worse. That means fewer stocks are holding the averages up. Implications are that lower prices are coming. Doesn't mean necessarily come in a straight line. Before we go into tomorrow's trade, let's see if we can figure out how low I think will drop. Well, I've updated the count. Here's what I'm using now. This should be the last wave of the 11-year rally. We're in wave Brown 3 of wave 5. I think one's completed, and we're now making an ABC for wave 2. No guarantee where this ends, so what you'd like to do is to have a Fibonacci retracement of wave blue 1. And you'd like it, if possible, to end in the fourth wave of lesser degree, and that gives us a number somewhere around 3153. And what you'd also like is for there to be some sort of Fibonacci relationship between magenta C and magenta A at that price, And you can see at that price, wave magenta C will be twice magenta A. So we're going to pencil in around 31.53, 31.54 for one of the targets of this drop, and a pretty reasonable one. As far as tomorrow is concerned, we have a high volume spike in E-mini. When you get over 3 million contracts, that shows capitulation. It really is a sign of a low. It doesn't mean you have to go up tomorrow, but usually as far as time is concerned, you're darn close. You'll see how this low was marked with a high volume spike. So we're in an area where we could have a rally. Trying to close this out. Won't let me. I don't know where that went. If you draw a line connecting these highs, you get today's low. You've got squaring of time and price. This low is 144 points. From this low is 144 days. So in addition to the marked stuff, you can see why I think there's a reasonable chance today's low holds, even if this number prints. Tuesday's pattern has an early high but could gap down first. Usually the day is a bullish bias, high in the final hour of trading. Failure is a straight line drop. This was the same pattern we had Friday, but today's open is a substitute for Friday's close, and there was your straight line drop. We have a lower target. Unless we gap up smartly, it should print. Longer term, I think that we still have a lot more to go on the upside. We're still in wave 5. Intermediate term, I have us in the 5th and final wave. Should be in wave C of 2 of that wave 5. Wave balance around 31.53 to 54 cash. We'll pencil that in as our target for this drop. Shorter term, the spike in E-mini volume. Volatility indices have bars completely over their upper Bollinger Bands. Put-call ratios are at extremes. We have support from the lower SPX Bollinger Band and the TDST line. All of these argue for a rally beginning soon. Unless we gap under it, I think today's likely to hold for tomorrow at least. So tomorrow has the early high. If we don't gap up, that's my target price. I'm thinking if we don't gap under it, this low holds. We should have a rally and one more drop, probably to around, I guess maybe 70 some handles lower than where we are now. And then I think the rally resumes. And that's today's call.